Every trader wants the same edge, a system that clearly shows when a trend is starting or ending. Finding precise entry and exit points can feel like guesswork. But what if there was a straightforward setup that filtered fake signals and helped you catch strong moves with confidence? In this tutorial, you'll learn how to build a two-indicator strategy that does exactly that. It combines the T3 trend with PR indicator and the OBV oscillator, a proven pairing that aligns price action with volume confirmation to reveal high-probability trades across any market and time frame. Let's break it down step by step, from setup to live trade examples.
Step 1. Setting up your chart. Let's begin by preparing your TradingView workspace and adding the first core indicator, the T3 trend with PR. Open TradingView and load any chart of your choice. For this tutorial, we'll use gold, XAU, USD on the 15-minute time frame. But this method also works effectively on forex pairs, crypto, indices, or stocks. It's flexible enough for both day trading and short swing trades. Click on the Indicators tab at the top of the screen. In the search bar, type TKP T3 trend with SA bar color. Select it from the list and add it to your chart. You'll immediately notice two color-changing lines on your screen. These represent dynamic moving averages that adjust with market momentum. Now let's fine-tune the settings for improved clarity and accuracy. Fine-tuning the T3 trend indicator. Click the icon next to the indicator's name to open the configuration window. Under the Input tab, change TSI Long Length from 25 to 35. Change TSI Short Length from 5 to 30. Adjust TSI Signal Length from 14 to 15. Modify the first length from 5 to 12. Change the second length from 8 to 14. These adjustments smooth out short-term noise while preserving accurate trend direction. Now move to the Style tab. Hide any unnecessary visuals or labels that clutter the chart and keep only the T3 fast line and T3 slow line visible. Click OK to apply your settings. Understanding the T3 trend logic. The T3 trend indicator is built around two adaptive moving averages, one fast, one slow, both changing color to reflect trend direction. When both lines turn sky blue and price stays above them, it signals a bullish trend. When both lines turn red and price moves below them, it indicates a bearish trend. This alone gives a powerful view of directional momentum, but to filter out false breakouts, we'll confirm each signal with volume strength using the next indicator.
Step 2. Adding the OBV Oscillator. Next, we'll strengthen our setup by adding the OBV Oscillator, a volume-based confirmation tool that measures the relationship between price movement and market volume. While price alone can sometimes give false signals, volume often tells the real story. The OBV Oscillator helps us verify whether a breakout or reversal is truly supported by buying or selling pressure rather than short-lived volatility. Adding the OBV Oscillator. Click on the Indicators tab again at the top of your TradingView chart. In the search bar, type OBV Oscillator. From the list of results, select the standard version and add it to your chart. Once added, you'll see a histogram appear below your main chart showing alternating bullish and bearish columns that visually represent shifts in momentum strength. Optimizing the OBV Oscillator settings. To make the reading smoother and easier to interpret, we'll slightly adjust the default configuration. Click the Settings icon next to the indicator's name. In the Input tab, change the parameter N from 20 to 25 to make the oscillator less reactive to minor fluctuations and focus more on meaningful volume changes. Move over to the Style tab. Hide any unnecessary visuals such as background lines or labels to keep the chart clean. Keep only the colored histogram visible. This is where all the important information comes from. You'll notice that sky blue columns represent bullish momentum, showing an increase in buying pressure, Yellow columns indicate bearish momentum, signaling stronger selling activity or a continuation of a bearish phase. Once finished, click OK to apply your settings. Your chart should now display a clean and responsive histogram that clearly shifts color with changes in market sentiment. How the OBV oscillator works. The OBV, or On-Balance Volume, oscillator analyzes cumulative volume flow, helping identify whether the current trend is supported by real participation from traders and investors. Here's what the colors mean in practice. When sky blue or bullish columns appear, it means buying pressure is increasing, suggesting that price movements upward are supported by solid volume strength. When yellow or bearish columns dominate, selling pressure is taking control, confirming a potential downward move or continuation of a bearish phase.
Step 3. Combining both indicators, core strategy. Now that both tools, the T3 trend indicator and the OBV oscillator, are fully configured, it's time to bring them together into a structured and reliable trading system. The objective here is straightforward. Only take trades when price direction, trend, and volume confirmation agree. By waiting for both indicators to align, you'll avoid low-quality setups and focus on trades backed by real momentum and participation. Buy setup conditions. To identify a valid long buy opportunity, make sure all of the following conditions are met. Trend confirmation, T3 indicator. Both T3 trend lines turn sky blue, signaling a bullish environment. Price should also be trading above both lines, which confirms that the short-term trend is in sync with the broader upward momentum. Volume confirmation, OBV oscillator. The OBV histogram begins printing sky blue columns, showing that buying pressure is increasing and traders are supporting the move. This confirms that the upward price action isn't just a temporary spike, it's fueled by genuine market participation. Price action confirmation. A bullish candle forms and closes above its open, reinforcing that buyers are currently in control. Ideally, the candle should have a solid body and minimal upper wick, showing steady upward strength. Entry rule. Once all conditions are met, enter a buy trade at the close of the bullish candle once the above signals align. Stop loss. Place your stop loss just below the T3 trend lines or beneath the most recent swing low, whichever level is closer and more logical according to the price structure. Take profit. Target a 1 to 1.5 risk-to-reward ratio, meaning for every 1 unit of risk, aim for 1.5 units of profit. This ensures balanced reward potential while maintaining solid risk management.
Sell setup conditions. For a valid short setup, look for the reverse conditions. T3 trend indicator shows both lines in red and price moves below them. The OBV oscillator forms bearish yellow columns, confirming downward momentum. A bearish candle closes in the same direction. Entry rule. Enter a sell trade on candle close. Stop loss. Above both T3 lines or the nearest swing high. Take profit. Aim for a 1 to 1.5 risk-to-reward ratio. This dual confirmation method helps filter weak setups and capture stronger trend continuations. This strategy provides a clean, visual, and rule-based approach to trading trends. By combining price-based confirmation, T3 trend, with volume confirmation, OBV oscillator, you gain both clarity and confidence in your entries. It's ideal for traders who prefer structure over guesswork, and it works beautifully across multiple markets and timeframes. In trading, clarity beats complexity. The T3 trend and OBV oscillator strategy gives you a systematic way to identify strong market direction without chasing noise or second-guessing your decisions. Remember, no indicator predicts the future, but when two tools confirm the same story, probabilities move in your favor. Use this system as a guide,
follow your risk rules, and you'll start to see more disciplined, confident trades. Thanks for following this tutorial. Stay patient, keep testing, and as always, trade smart, trade safe, and happy trading.